Hello, ladies and gentlemen. Good morning to you all out there. It's a brand new week, and I'm so excited to kick off another round of informative and insightful trading analysis for the new week. In today's session, we have to cover a lot of financial instrument that I've worked on over the weekend. In fact, I have very interesting and simple setup that we can actually use to take advantage of any potential trading opportunities for today. So if you are in and excited to be part of the session, let me know in the comment section by typing hi in the comment section, as this will confirm to me that we are both on the same page here. So if you can see my screen and you can hear my voice, let us kickstart the session by typing hi in the comment section. So I'm trying to load up my comment section to see your response so that we can kickstart the session. Okay, so what do we have here? Okay, so I can see, let me see what's happening. Okay, 2009. Okay, I can see you. Good morning. 2384, good morning to you. Thank you very much for that confirmation. 924 8360, thank you very much. Okay, hey Carrie, good morning. Thank you very much for that confirmation. How are you doing? Well, I'm doing very fine here, and trust you are doing as well. Okay, Nest 57, good morning. Thank you very much. Susie MB, good morning to you. Okay, thank you. TS King, how are you doing today? It appears this is your first time commenting here. Let me know if this is your first time. If you're a first timer, let me know in the comment section. All right. Okay, so with the handful of feedbacks here, I want to take this as a confirmation that we are good to go this morning. And once again, I welcome you all to yet another promising session. My name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as usual as we delve into the financial market, analyzing the market using technical parameters such as trend lines, chart patterns, and important key levels to identify potential trading opportunities ahead of the New York session. And for those who are joining us for the first time, you are highly welcome on board. I'm so excited to have you guys around. So what we simply do here is to come together as a community in anticipation of the New York session, of course. And during this time, we always review and manage our current positions while we also aim to position ourselves strategically for today's trading session. So that is simply what we do here. It's on a daily basis, 10 a.m. UTC, 11 a.m. West African time. So try as much as possible to stay tuned in throughout the session and join us on subsequent session. And trust me, eventually you will be able to acclimatize and at the same time use the information you have gathered here to make independent decisions on your account. And today being the first day of the week, this is a very huge opportunity for you to share with us whatever financial instrument you want us to look at for the week. So if you have any instrument, be it cryptocurrency, options, currency pairs, commodities, whatever it is, let me know in the comment section and I will try to incorporate it into our plans for this week. And in fact, I have a handful of instrument that we are going to be looking at today with very simple setups that we can use to guide our trading activity for this week. So without further ado, let's dive right into the business. And the first thing we are going to be doing as usual is to check the economic calendar. You know how important it is for us in this community to know what the fundamentals are saying, as these fundamental factors often manifest on the charts in technical patterns and price movement. And by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns. So with that being said here, I looked at the economic calendar this morning for Monday, June 26, and there were no high impact events that will be affecting any of the currencies that we are going to be monitoring for the week. So what we are going to be doing here is to skip this aspect, and then let's dive right into the chart using our technical skills to identify potential trading opportunities ahead of the New York session today. So once again, you are welcome, and let's dive right into the business. So as usual, the first instrument we are going to be taking this morning is going to be the US oil. So we are going to quickly take an holistic perspective into what is really going on in this market and how we intend to position ourselves ahead of the New York session today and even for the week. Now, the first thing I did here on the US All Spot was to, well, first of all, let me congratulate everyone who has been part of this profitable journey we had last week. Remember, we were able to take advantage of this very strong, impulsive move to the downside last week. And in fact, that gave us over 400 pips on that one as we rode the move all the way to the downside, even maximized the profit on that one by adding more positions as price action broke down key structures. So well done to everyone. So let's see how we can also take advantage of trading opportunities this week and also start the week on a very positive note. So the first thing we saw here on the 4 hours time frame is the fact that price action has been ranging since the beginning of this month. As you will see that the $73.50 level had continued to be a very strong selling niche in this market. As you can see, buyers have been finding it difficult to break through this structure. Then the same thing also happened on the other side here around the demand zone, where we saw how sellers have been trying to break through that level, but buyers have been coming in at every point in time to negate the bearish momentum at that point. And if we look at things closely here, going to as far back as the beginning of the week, you will see how buyers negated sellers' pressure around this area. The same thing also happened during the midweek of this month, and then we saw another one happen here during the last day of last week's trading session. And in fact, there is something peculiar about the last trading session of last week, which also sheds more light into the strength of the buyers around that demand zone along the $67.50 area. Now look at what happened here. We had a hammer candle after price action tested that demand zone, giving us a clue of how buyers are still very strong around that area. And for me, the fact that price action remains above that demand zone, it's quite reasonable that we want to be looking out for buying opportunity as long as price action is above the structure. And only if price break through the structure can we be considering selling the US All Spot in the long term. But I doubt if that will happen. So for this week, I'm still looking forward to a bullish momentum. And to guide our trading activity today, for this week rather, we have a key level already, which I was able to spot at around the $69.50 level. And in fact, one peculiar thing about this level is the fact that it has been a major determinant of price action since the beginning of this month. Now, if we go to as far back as the first day of this month, we saw here how this area was a strong selling niche before price action broke out of the structure with an engulfing bullish candle. Then at the second week of this month, we saw how price came back to retest structure. We saw the breakdown here. We saw a little bit of consolidation phase around this area. Then we saw a breakout a couple of weeks ago. And during the course of last week's trading session, we saw how price broke through to the downside and even came back to close along that area at the $69.50 level. So what we are going to be doing now is to scale down into the lower time frame to see how participants in this market will be or has been reacting to the $69.50 level since the beginning of the week to determine what our next line of action will be. So it now depends on the technical structure we can find around that area on our lower time frame that will help us to position ourselves ahead of the new week. So scaling down into the lower time frame on the 1 hour time frame, this was what I was able to spot here during the early hours of today. So the first thing we observed on the 4 hours time frame here is the fact that we had a bullish gap where reveals the level of trading possibilities during the weekend. That is, institutional sentiment was more of bullish, as you can see, giving us a signal that we might likely be seeing a continuation of this pattern. Then in addition to the bullish gap we saw here is a range where price action has been caught within the $70 level and the $69 area since the beginning of this week to emphasize the level of indecision at this particular point in time. And one interesting thing about the structure is that it has given us a structure to work with for this week. And you know how we use this kind of flat channel when we start identifying them on our chart. We want to wait patiently for structures to mature, where price will give us a signal in the form of either a breakdown of the support line for buying opportunities, for selling opportunities, or a breakout of the resistance line for buying opportunities. Then in addition to that flat channel is a couple of trend lines here after identifying higher lows. So this was the lowest point price action got to last week, and then we can see price has continued to find higher lows here. So what we are going to be doing is to connect a series of higher lows, and in fact I have a couple of trend lines here to emphasize the bullish momentum at this particular point in time. Now, as long as we have a trend line, ascending trend line like this, as long as price remains above that trend line, we always want to look out for buying opportunity and only look out for selling opportunities if price action breaches the trend line and drops to the downside. Now, with this case scenario we have here, price still remains above the trend line, which further emphasizes the potential that buyers could still take over this market. So as a result of this, I'm going to be having a buy stop order sitting above the $70 area so that we can capture the bullish momentum if it finally happens. So let's see how this is going to play out going into the New York session today. So you want to mark this level out. Have your buy stop order anywhere above the $70 area while we look out for more opportunities to maximize this move at the appearance of new technical structures. However, in as much as we are looking out for buying opportunities in this market, you know how we do it in this community. We always want to keep tabs with the opposite direction too as well. And if that is going to be the case, what do we see on this chart that will make us change our bias from bullish to bearish? Well, we already have a trend line to work with, as you can see. Then in addition to this trend line is the support line of that range we identified earlier, which is situated along the $69 area. Now you will see what has been happening around that $69 area since the beginning of this week. We have been seeing some buy pressure around that area, emphasizing the strength of buyers around that level. Now, for us to sell, we want to see price action break through that structure. In fact, break through both the trend line and the $69 level for us to sell the US oil spot for today. However, because of the fact that price remains above a very strong demand zone, which we identified on the 4 hours time frame, remember that's blue rectangle on your screen, that was our demand zone that we identified at the beginning on the 4 hours time frame. Now, because price remains above that trend line, it's quite reasonable that we look out for buying opportunity. But if we are going to be selling above a strong demand zone like this, definitely we want to see a significant confirmation that sellers are gradually gaining momentum and that this momentum has a potential of breaking through that demand zone. So because of this, we don't want to have a sell stop order, but instead wait for the breakdown to happen. Then we scale down to our lower time frame where we are going to be looking out for a retest of structure. It could be the retest of the 69 or the retest of this trend line where continued selling pressure will give us an opportunity to join a bearish move to the downside. So this is the only way we are going to be looking out for selling opportunities on this particular market. So you can see we have a simple setup. We have a range to work with where we shall remain patient for either the breakout or breakdown of this range to give us an opportunity to either buy or sell the US All Spot for today. So let's keep this in mind. Let's mark these levels out on our chart, and you can as well screenshot my screen so that you can use them as a reference point to make your independent decision on your own account. So these are my views here on the US All Spot for this week. Very simple setup we have there. So if you have any questions or you need me to do some clarifications as regards to what I talked about here, feel free to let me know in the comment section. And trust me, I am here and willing to be of help in that regard. Okay, so what do we have in the comment section? Okay, good morning, 8818. Good morning, glad to have you around. Valerie, good morning to you. Glad to have you. 1269, good morning. Okay, Boben, good morning to you. 269, good morning. 8603, good morning to you too. All right, so in the absence of no questions, I want to assume that we're on the same page here. So in that regard, I will be moving on to our next option. And our next option for today is going to be the USTech100. So on the USTech100, we want to take an holistic view of what is going on in the market. And in fact, this instrument here has been a very profitable trade for us. We had a profitable trade here on the USTech100 last week as we sold and we also bought. Remember, we sold, took advantage of this bearish impulsive move to the downside. This one right here, we took advantage of this one, and then we also bought again as soon as price got into that 14,800, and we rode it all the way to the upside here. So going into the new week, we have new fresh perspective to this market. And the first thing I did on this chart was to take into consideration the activity of price action since the beginning of the month of May. And if you look at the structure closely, you will notice that price action has been on a very strong bullish momentum. And to emphasize the buyer's strength in this market, we have a couple of trend lines that you can see on your screen. So I have the major trend line, which is the thick green dotted line on your screen right here. So that is the major bullish trend line. And then we have the second trend line after the deviation from that bullish trend line here at the beginning of the month of May. And this is giving us a new trend line that you can see here, which definitely is going to be one of the parameters that will be guiding our trading activity for this week. And one thing you will notice since on Friday of last week, we can see how price action has been trading along that trend line. Now, one thing about the structure is that anything could happen around this area. In fact, we are at a critical point where that trend line could hold another wave of bullish momentum to the upside, or in fact, it could be broken to the downside to incite a bearish momentum, which could probably come to respect this bullish trend line here to incite another wave of bullish momentum. Now, if we zoom into the structure in this market, hold on a second, let me delete this ones as they're no longer needed. So we want to zoom into what has been happening in this market in the last couple of weeks. And one thing you would observe here is, first of all, the 14,800 level. Now we saw here since the break above of this level during the second week of this month, we can see here that that level had continued to hold buying pressure, negating all attempt by the sellers to break through that structure. We saw what happened here on the 13th of June. We saw how this level 2 was a strong buying niche on the 14th of June. And we saw what happened here last week's trading session. We continue to see buyers negate all the attempt by the sellers to break through that structure. Then one important thing about that level is the fact that it also shares a confluence with this bullish trend line. Now, the question at this juncture is, Will this trend line be respected again, since we have a strong demand zone around the 14,800, which has been holding buy pressure judiciously for the last couple of weeks now? Will this trend line be an opportunity to buy the USTech100 today? Or are we going to be witnessing a situation where the trend line will be broken to the downside, break through the 14,800 to incite a sell-off in this market? So this is what we are going to be looking at, and you would agree with me that we are within a very critical structure around here. Now, to help us navigate this trade this week, I have identified a key level at this psychological area that is exactly around the $15,000 mark. And you can see how this area also has been a very strong determinant of price action. If you look at what happened here, it was a strong selling niche before this level was broken to the upside. We saw buy pressure here, and then we saw how price action broke down, broke out again, broke down again. You see how that level has been a major determinant of price action. So for me here, I want to see price action climb above that key level to give me a confirmation that buyers are going to be taking this price to another level or a new high. And in addition to that, we also have a trend line after connecting the series of lower highs here, which emphasize the selling pressure we noticed last week. So a further breakout of that trend line will further confirm the strength of the buyers, as a trend line at the breakout of the trend line will confirm that the trend line may no longer have the capacity to continue to negate that bullish attempt. Now, with the information we have gathered here on the 4 hours time frame, we want to scale down into the lower time frame to see how participants in this market will be reacting to this range between the $15,000 and the 14,800. So when I scaled down into the 1 hour time frame, this was what I was able to come up with this morning. So zooming into the current structure, the first thing I observed at the beginning of this week was the fact that price action started with a very strong bullish engulfing candle, as you can see here. But as soon as price got into the 14,945 level, that is the highest point price action has been for this week, we saw some selling pressure resume around that area, which lasted for about 3 hours before we saw this impulsive move to the downside, which in fact broke through where price action started the week, which is at the 14,890. So right now we already have a breakdown of a structure, and the question right now is that will this turn out to be a bearish signal for the week? So remember, we already have a range where price action was caught within before we saw the breakdown of the structure. And you all know from a technical standpoint, when this kind of breakdown happens, we want to be part of a bearish move. And for those who are taking advantage of that move, well done to you for being on standby, as you will currently be running with about 33 pips in profit at this point. But for those who had missed out on this opportunity just like me, I want to see price action come back and retest the structure that was broken to give me an opportunity to sell. So from a technical standpoint, a breakdown of a structure, I'm expecting price to come back, retest this level at the 14,890, then continued selling pressure on my lower time frame will give me that opportunity to be part of a bearish move to the downside. Then in addition to the structure here, we want to also acknowledge that price action has been finding lower highs but yet to find lower lows here. So if that continues, then I want to see a further breakdown of the 14,800, which is the support. Remember, I shared this with you on the 4 hours time frame, where it has been a strong support, supporting buy pressure for the last couple of weeks. So a further breakdown of that area will welcome more opportunities to sell. So let's see how price action will play out today. Then I also want to connect the series of lower highs here to give us a trend line to work with for this week. So I will thicken this a little bit, and you want to also mark this level, this trend line on your charts, so that we can use it as a reference point to guide our trading activity. So what this simply means is that as long as price remains below that trend line, we want to feel comfortable in our sell position while we also look out for more opportunities to sell the USTech 100. Now, price goes to come back, just like I said earlier, back into the trend line. Continued selling pressure below the 14,890 at the trend line will welcome selling opportunities. Then we could now have a sell stop order below the 14,800 to maximize this bearish move to the downside. Now, in as much as we're looking out for selling opportunities in this particular market, you know how we do it in this community. We also want to be on standby for the opposite direction too as well, just in case buyers come in to take out all the sellers in this market. We also want to be on standby to catch that move. Now, with the current situation we have here, what is it that we will see on this chart that will make us change our bias from bearish to bullish? Now, since we already have a trend line to work with, and then we have agreed here that as long as price remains below the trend line, we shall be looking out for selling opportunities. But if at any point in time today price action breaches the trend line and then breaks above the trend line, then at this point we will start considering buying the USTech 100. Now, we are not going to be getting too excited at the breakout of that area, as we'll still need some confirmation to happen before we join that move. So once we have the breakout of the trend line, what we are going to be doing is to scale down into the lower time frame, like your 15, 10 or 5 minutes time frame, to look out for retest of the trend line and the 14,890. But most importantly, we want to see signs that sellers are finding it difficult to drop back below the trend line. So we are going to be seeing something like this on our lower time frame to give us a confirmation that buyers are getting stronger. Then we could buy at the breakout of the neckline and have a buy stop order above the 14,945 to maximize that move. And if price action continues to the upside, breaking out of the $15,000 level, then we will have no other choice than to add more position to our existing trade. So that is how we are going to be buying the USTech 100 for today. So you can see how important this bearish trend line that we identify here is going to be a major factor in guiding our trading activity for today. So you want to mark this trend line out on your 1 hour time frame, and you also want to mark out this range here so that we can use it as a reference point when price action gets close to that zone. So these are my views here on the USTech 100 for today. If you have any questions, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions before we move on to the next instrument. All right, so in the absence of no questions, I want to assume that we're on the same page. So we'll just simply move on to the next instrument on our watch list for this week. And the next instrument I'm going to be taking on is going to be the GBPUSD. So on the GBPUSD, we want to scale up into the 4 hours time frame, where I was able to identify a simple structure that we are going to be using to guide our trading activity for this week. Now, the first thing I did on the 4 hours time frame of the GBPUSD chart was to take into consideration the activity of price action since the last trading week of last month. And if you look at this closely and zoom out, you will see how the market has been screaming bullish for the last 3 to 4 weeks now. And to further emphasize the strength of the buyers in this market, I have a couple of trend lines to work with. So the first one is this major thick dotted green line on your screen, which serves as the major trend line for this bullish momentum. Then we have the second trend line after price action deviated from that major trend line, as you can see here. And since the 5th of June, price action had remained above this trend line to further emphasize the strength of the buyers in this particular market. Now, if we zoom into the current structure and taking into consideration what has been going on in this market in the last couple of weeks, you would notice that price action has remained ranging between the 1.28500 level and the 1.2700 area to further emphasize the level of indecision in this market. And one thing that we also noticed last week is this continued lower highs, giving us a bearish trend line to work with for this week. Now, price action has continued to respect the trend line. Now, the question for this week is that will this trend line hold on to this price action, leading into a sell-off in this market where price will break through that bullish trend line and also our key level for the week, which is situated at the 1.2700 area. Now, the reason why I have a key level at the 1.2700 level is simply because of how this level has been a major determinant of price action since the second week of this month. Now, if you look at what happened here on the 14th of June, we saw how this level was a selling niche before we finally saw the breakout of the structure here. Then since that moment, price has been finding it difficult to drop below that level, and that level has been serving as a very strong demand zone for the last couple of weeks now. And the same thing happened during the course of last week. As you can see, sellers are still finding it difficult to break through that structure. And one interesting thing about this structure is that it also shares a confluence with that bullish trend line that you have here. So if the continued buy pressure we have been noticing above the 1.2700 happens and continues, then we might be looking out for buying opportunities since price action still remains above our bullish trend line. However, if price action at any point in time breaks through the bullish trend line to the downside, then it will have also broken down of our key level, and if that happens, we want to be getting ready to sell. And if we are going to be selling, we want to be looking out for retest of that 1.27 or the trend line to further give us a confirmation that sellers are gradually gaining momentum. So what we are going to be doing now to have a better perspective of what is really going on in this market is to scale down into a much more lower time frame so that we can see how participants in this market has been reacting to that key level just above the key level since the beginning of this week. Now, scaling down into the 1 hour time frame, we begin to see things clearly. So what I did here this morning on the 1 hour time frame is to try and decipher based on the current market structure formed since the beginning of this week to determine what our next line of action will be. And in fact, I was lucky enough to find a simple setup here, which we are going to be using to guide our trading activity, at least for the first half of this week. Now, the week started on a bullish note. As you can see, it started at around the 1.27100 level, a strong psychological area considering the round figure of that price. Then we saw how price climbed up into the 1.2740 level, and we have been seeing some knocking of that ceiling before we finally saw the breakout of this area. Though price has dropped back below this area, but one thing we can take from this structure here is that we have a flat channel to work with for this week. And you know how we do it whenever we have this kind of flat channel. We want to wait patiently for structures to mature, where we look out for either a breakdown of the support line to give us an opportunity to sell, or the breakout of the resistance at the 1.27400 level to give us an opportunity to buy. Now, with the situation we have here, I already had a buy stop order triggered after having a buy stop above that level, but at this point in time I'm currently in a loss. But one thing I will say here is that the potentials of buyers at this particular juncture in this market is still very, very possible, and one of the reasons is simply because of how that 1.2700 area has been a strong buying niche. As we can see, sellers have been finding it difficult to break through that structure. And for me at this point, I will still be looking out for buying opportunity above this level. So you could have a buy stop order above the 1.27400 level to capture that move to the upside. Then in addition to this information we have here, remember we had a trend line, a descending trend line, which has been guiding the selling pressure since last week's trading session. As you can see here, you can see how that trend line also shares a confluence with the resistance line of that flat channel we identified earlier. So a breakout of both of the structure will be an opportunity to be part of a bullish move to the upside. So we want to mark these levels out on our chart so that we can use it as a reference point when we are about to make our independent decision on these accounts. So these are my views here for buying the GBPUSD today. And one thing about this structure is that if price action continues to the upside, we also have key levels that we can use to maximize the potential of this move. So we have one at the 1.27500 area, a strong psychological level considering the round figure of that price. And one thing I'm going to be doing here, I'm not going to be having a buy stop order above the 1.275 as I want to see a breakout retest before joining or adding any position above the 1.275. And if buy pressure continues like a retest of structure, then I want to be having a buy stop order above the 1.27850 to maximize this bullish move to the upside. So this is how we are going to be looking out for buying opportunities on the GBPUSD. So we are going to be positioning ourselves just right above the 1.274 to capitalize on this potential bullish move to the upside. However, if price action continues to drop to the downside on this market structure, well, I want to see price action take out the whole of this buy pressure around buy positions around the key level for the week situated at the 1.2700 area before I can start considering selling the GBPUSD. And one thing there is if price breaks down the 1.27, it would have also broken down this ascending channel trend line we identified on the 4 hours time frame. And if this happens, you know how we are going to be doing this. We scale down into our lower time frame as soon as the breakdown of the key level happens. Then we wait for a retest of structure to happen. It could be the retest of the trend line, the 1.27 or the 1.271 area. But most importantly, we want to be seeing reversal patterns. We want to be seeing signs that buyers are finding it difficult to climb back above the ascending trend line for us to join a bearish move to the downside. So this is what I'm going to be looking forward to for today. So as long as price action still remains above the 1.27, I still hold on to a bullish bias. But if we have a breakthrough of the 1.27 and the ascending trend line, then at that point, we will start considering selling the GBPUSD. That is my view here on the GBPUSD for today. If you have any questions, feel free to let me know right in the comment section. So I will be taking the next 10 to 15 seconds to read through the chat, the comment section, and see if there are any questions before I move on to the next instrument. All right, so in the absence of no questions, I want to assume that we are on the same page. So we will just move on to the next instrument. So the next instrument we are going to be taking is the XAUUSD, that is the gold spot. And on the gold spot, I already have a buy position triggered, so I will be sharing with you what led into the idea of buying the gold spot at this particular point in time. And we are going to be going into the higher time frame where we are going to be looking at things from an holistic point of view to see how the market has been, price action has been reacting to this current market structure. Now, what I did on the 4 hours time frame of the XAUUSD chart is to take into consideration the activity of price action since the beginning of the month of May. And one thing you will observe here is that price action has been on a very strong bearish momentum in the last 7 weeks, I think. And to emphasize the bearish momentum, in fact, we have triple trend lines here, which has been guiding this bearish momentum for this long. And in fact, these trend lines have been helping us to guide our selling opportunities in this market. So it is quite obvious that price action has been very bearish in this particular market. However, we have a simple structure. We have a structure here along the 1,935, which I'm going to be using as my key level for the week. And the reason why I have this level serving as my significant structure to guide my trading activity for this week is because of how this level has been a major determinant of price action in the last 3 weeks. Now, if you look at the structure closely, you will see that despite we've been seeing lower highs in this market, for about 2 weeks, price action was unable to break through the structure, giving us a clue that buyers are strong around that area and sellers are finding it difficult to find that momentum that will finally break through that structure. And not until last week's trading session, we finally witnessed the breakdown of this level. And in fact, on Friday of last week, we saw how price action came back to retest that area. Now, this begs the question at this point, will this turn out to be a trend continuation to the downside, since we already have a breakdown, retest of the 1,935? Well, that question was a suspect when I noticed the structure around the 1,910. So I will zoom this in a little bit so that you can see things clearly. So we saw here on Friday, as soon as price got into the 1,910, we saw buyers push price to the upside, bringing price back into that key level at the 1,935. And since then, price action is yet to break below the previous low. So instead of finding lower lows, we were seeing higher lows in this market, which from a technical standpoint, when we start seeing higher lows, it is a sign that buyers are gradually gaining momentum. And as a result of this, I'm looking forward to buying above the 1,935 level to the upside. And if a breakout of the 1,935 happens, I'm of the opinion that we are going to be seeing a strong bullish move to the upside. Then in addition to that one is the fact that I'm beginning to see something like a reversal pattern in the form of a double bottom structure. Now, if we take into consideration the impulsive move that brought price into the 1,910, brought price back into the 1,935, we saw a higher low. Price was unable to break around the previous low here, and it appears price action is gradually approaching the 1,935 again. And you know, when we start seeing a potential reversal pattern like this, the next thing we want to be doing is to identify a neckline which will be serving as a yardstick to confirm the validity of that reversal pattern. And coincidentally, the neckline falls just exactly along our key level for the week, which is situated along the 1,935. Now, like I said earlier, a breakout retest of the structure will further confirm the potential of a bullish momentum to the upside, which is what I'm looking forward to on this current market structure. Now, because of the idea of the breakout of this area that I'm hoping that price will continue to the upside, I wanted to maximize the move, that is, join the bullish momentum even before the breakout happens. So that is why I looked out for a structure around here to maximize that move. I will be showing you how I did that on a much more lower time frame. But before I go into the 1 hour time frame to look out for trading opportunities, I want to call our attention to this 1,910 level, which for me, a breakdown of this level will be what I will be looking forward to sell the XAUUSD today. As a breakdown, price action taking out all the buy position there will be a very huge confirmation of a strong bearish move to the downside. And if we consider the Fed chairman's comment last week as regards to the potential of rate hikes a couple more times before the end of the year, this is a sign that could bring some positive traction to the US dollar, but we don't know when that will happen. So we should also put that in mind. That is why we are going to be considering the potentials of sellers too in this particular market. So with the information we have gathered here, we shall be scaling down into the lower time frame so that we can see how participants in this market has been reacting to the structure, and let's see if we could find a simple setup that we can use to guide our trading activity for today. Now, scaling down into the 1 hour time frame, this was what I was able to spot here this morning. So the first thing I saw on this chart was the fact that we had a bullish gap, which revealed the sentiment and the institutional sentiment in the market during the course of the weekend, as we saw here. So there is a tendency of a bullish momentum to the upside. Now, in addition to the bullish gap we had here, I was able to spot the fact that price action was initially ranging for the first 8 to 10 hours of this week, giving us a clue into the level of indecision in this particular market, and also giving us a flat channel to work with for the week. And you know how we do it whenever we have this kind of flat channel. We want to wait patiently for structures to mature. And when structure matures, the breakout is what we are looking for. A breakdown of the support line will definitely give us an opportunity to sell, while the breakout of the resistance line will give us an opportunity to buy. And with my buy stop order sitting above the $1,928.50 level, I already have a buy position triggered at this point. And for those who are taking advantage of that move, well done to you for being on standby to have caught that move, as you will currently be running with about 42 pips in profit at this point. So if you do have a buy position, my advice here is for you to move your stop loss to your entry point. Let's secure this position and wait and see how price action will be playing out above this resistance level. Now, for those who had missed out on this opportunity, well, there's no cause for alarm, as we can still wait patiently for price action to mature and give us more opportunity to maximize this move. Now, with this situation we have here, now that we already have a breakout of the trend line, that is this trend line here, we already have the breakout of this trend line, that is one. There is still a chance that price could come back and retest the structure. So from a technical standpoint, when price breaks out of a key structure like this, we expect that a retest could still happen. So for those who had missed out on this opportunity, we could still wait and see if the market will come back and retest the structure. And if it does, we want to be looking out for buy pressure above this area for us to join a bullish momentum to the upside. Now, in addition to the structure we have here, I have a ascending trend line which I was able to spot after connecting the pivot low since Friday of last week's trading session. So we have the pivot low here, we have one here, and then we had another one at the beginning of this week around here. So this trend line here has been guiding this bullish momentum so far, and for the fact that price action remains above this trend line, we have no other choice than to continue to look out for more opportunities to buy. So only if price action breaches this trend line to the downside can we start considering selling the XAUUSD at this point. So our key level at the 1,935 still remains. So we are going to be having a buy stop order again above this area, where a breakout will welcome more opportunities to maximize this bullish move to the upside. So let's be on standby to catch any of these opportunities as we continue to monitor price action. So you want to mark these levels out on your chart so that you can use them as a reference point, or you could as well screenshot my screen on your phone so that you can just look at it whenever price action gets into the structure. Now, in as much as we are looking out for buying opportunities in this market, the potentials of sellers at this point cannot be ignored too. Well, since last week, we have been witnessing a very strong bearish momentum. So it's still very possible that the market could still push price to the downside. And considering the first German speech comments as regards to the possibilities of interest rate hike next month, there is still a likelihood that the dollar could still rise at this particular point in time. Now, what do we want to see on this chart that will make us change our bias from bullish to bearish? Well, we already have a trend line, which I identified earlier. This is the bullish trend line we saw here. So for us to sell the XAUUSD today, I would rather see price action break through this trend line to the downside. And if it breaks down the trend line, then at this point, we will start considering selling the XAUUSD. Now, a breakdown happens, we scale down into a lower time frame, look out for retest of structure, or place a stealth stop order below the 1,922 to maximize the potential of this move to the downside. Then if price action goes on to break down the 1,910, we will be welcoming more opportunities to maximize this move to the downside. So let's keep this in mind. mark these levels out and let's use it as a reference point to guide our trading activity for today. Now, if you have any questions, feel free to let me know in the comment section while I move on to the last instrument for today, which is going to be the USDJPY. So on the USDJPY, I already have a sell position triggered. So I would like to share with you how I got to that point. But before we go into that details, let's look at the 4 hours time frame, where we are going to be having an holistic perspective into what has been going on in this market in the last couple of months. So the first thing I did on the 4 hours time frame was to consider the activity of price action since the month of March, in fact, for the last couple of months. And we have a couple of, in fact, I have 3 trend lines here, which we are going to be using to guide our trading activity. Now, the first trend line here is this thick one here. Then we saw a deviation from this trend line here, which happened during the second week of the month of May, giving us a new trend line to work with. And we used this trend line until the second week of this month, when we also had another deviation from this one here. And since the last couple of weeks now, we have been using this new trend line to guide our trading activity. So far, so good. Now, with the situation we have here, price action remain above the trend line. What is going to be our plans for today? Well, if we zoom into the current structure here and look at what happened last week, remember that it took a long time for us to for this bullish traction to happen. Remember, price action was ranging throughout the first half of last week. Remember, throughout the first half of last week, price action was ranging before we finally saw the breakout of the structure on Thursday. And since price action moved significantly to the upside, we saw here that as soon as price got into the 143.900 area, we begin to see some selling pressure. And this gives me an idea that we might likely be seeing a retracement of this impulsive move that started at the beginning of this month. And if that is going to be the case, we are likely going to be seeing some profit-taking activity, which will obviously reflect on the chart as a retracement move, probably into that major trend line that we identified earlier, before probably another wave of bullish momentum will happen. So in as much as this perspective is very, very likely, how do we intend to position ourselves ahead of the New York session today? So we already have a channel where price has been ranging now between the 143.900 level and the 142.850 area. Now, with the situation we have here, we have the resistance level and then we have the support line. For me to sell the USDJPY, we would want to see price action break through that support line at the 142.850, which also shares a confluence with that ascending trend line we identified earlier. So a breakthrough of both the structure will confirm that the trend line may no longer have the capacity to continue to negate the selling pressure in this market. And if a breakdown happens, a retest of structure will be a good confirmation to ride that move all the way to the downside. So this is how we are going to be maximizing the selling momentum in this market. And for buying the USDJPY at this point, we could see this whole flat channel we have here transition into a trend continuation pattern, where the breakout of the 143.900 area will be welcoming more opportunities to buy the USDJPY for this week. So now that we have this information marked out, we want to scale down into the lower time frame to see how participants in this market will be reacting to the structure, so that we can maximize any of this move. If it's going to be bearish, we want to join early enough, even before the breakdown of the 142.850 happens. And if it's going to be a buy position, we want to be buying even before the breakout of the resistance line at the 143.900 level happens. Now, with the situation we have here, we want to scale down into the lower time frame to have a better perspective into what is really going on here. Now, when we scale down into the 1 hour time frame, this is what I was able to come up with this morning. So I took into consideration the activity of price action early this week. And one thing I saw here is that we have the price action started on a bearish note for this week, and we saw how price action fell into this range between the 143.750 and the 143.250 level. And with this kind of simple setup here, you know how we do it. We want to wait for either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. So with my orders placed at both ends, I had my sell stop order triggered, and in the last 4 hours, price action has been trading below the support line of that channel that we just identified now. So what this simply means is that as long as price remains below this level, we are going to feel comfortable in our sell positions, while we also look out for more opportunities to maximize this move. Now, in addition to this flat channel we have here, we have a trend line which we are also going to be using to guide our trading activity today. And what I did here to get this was to connect a series of lower highs which emphasize the selling pressure in this market. So we are going to be using this trend line to guide our moves. So you want to mark this trend line out on your 1 hour chart, as this is going to be a very important factor that will be guiding any trading opportunity today. Now, for those who had missed out on this opportunity, that is the breakdown of the 143.250, we could still see some opportunities coming anytime soon, as price action could still come back to retest the trend line, where continued selling pressure below the structure will be welcoming more opportunities in this market. So don't let's be worried. Let's keep calm and wait for new structures to mature. Now, in order to maximize the bearish momentum in this market, we have the 142.850, a level which has been a strong buying niche for the last couple of weeks now. So we want to see price action break through that structure to the downside, which I also mentioned on the 4 hours time frame would also have broken down the ascending trend line to give us more opportunities to maximize this bearish move to the downside. So this is how we are going to be selling the USDJPY. So for me, for today and for the first half of this week, I'm tending towards a bearish momentum. However, in as much as we're looking out for bearish opportunity, we cannot ignore the potentials of buyers in this market. We saw on the 4 hours time frame how the bullish momentum has been very strong in the last couple of weeks, and we could still see price action climb to the upside. Now, with the current market structure we have here, what are the things we are going to see here that will make us to consider buying the USDJPY? Now, if we are going to be buying the USDJPY from the structure, we want to see price action take us out of our sell positions and break out of this bearish trend line. So you see why you need to mark this trend line out on your chart, because it's going to be a very important determinant of price movement, at least in the first half of the week. So a breakout of this trend line will definitely give us a signal that the trend line may no longer be able to negate the bullish attempt in this market. And once the breakout of this trend line happens, we want to scale down into our lower time frame, where we want to be looking out for patterns and structures that will support buying opportunity. And this will reflect on the chart as price retesting the trend line or retesting the 143.250, where continued buy pressure above the structure will be welcoming more opportunities to buy. And in fact, we can maximize this bullish move as we have key levels at the 143.750 to add more position to our existing trade. And we also have another key level at the 143.900, which is our key level for the week, to maximize the potential of this move to the upside. So that is how we are going to be trading the USDJPY for today. So I hope that you mark these levels out on your chart, or you can as well screenshot my screen so that you can use it as a reference point to guide your trading activity today. So let's keep this in mind, and let's continue to monitor price action as we gradually approach the New York session. So that is that on the USDJPY. If you have any questions, feel free to let me know in the comment section. Now, I can see a comment here from Abby2652. Are you still around, Abby2652? You are asking that are we going to sell or buy the GBPUSD? Well, I did a detailed explanation on that, on what we are going to be looking out for to buy or to sell this instrument. So I will go back into the 1 hour time frame here to share with you again what I discussed about this GBPUSD chart. So I said here that we already had a flat channel identified at the beginning of the week, which emphasized the level of indecision in this market. And what we normally do whenever we have a flat channel like this is for us to remain patient and wait for price action to either break down the support line to give us an opportunity to sell, or break out of the resistance line to give us an opportunity to buy. Now, for the sake of this GBPUSD, the fact that price action remains above a very strong demand zone, I told you that I'm tending towards a bullish momentum. And to capture a bullish momentum on the GBPUSD, I said we should have a buy stop order above the 1.27400 level so that we can capture that bullish move to the upside. So a breakout of that resistant line will welcome the buying opportunity we are looking forward to on the GBPUSD. However, I said here, if the price does not go to the upside, but instead continue to drop to the downside, then we might likely be getting ready to sell. But we are not going to sell unless price action takes out all the buy positions along the 1.2700 area. As you can see, this level has been a very strong demand zone in the last couple of weeks. So I said for us to sell here, I want to see price action break through the 1.2700 level, which if the price breaks through the 1.2700 level, it would have also broken through the ascending trend line here, which at this point, the trend line may no longer have the capacity to continue to negate the bearish momentum, which is going to be a clear sign that sellers are gradually gaining momentum here. And I said something here that we are not going to be jumping into a sell position right away, as soon as we have a breakdown of the 1.27, we are going to scale down into our lower time frame, where we are going to be looking out for a retest of structure, continued selling pressure below this area to give us an opportunity to sell. So from what we have on the 1 hour time frame here, we have simple sets of simple levels that we have identified here, which you also want to mark out on your chart to use it as a reference point to guide your trading activity. So for buying the GBPUSD, we have the 1.27400 level. Breakout reset of that structure welcomes buying opportunity, while the breakdown of the zone between the 1.271 and the 1.2700 area will be welcoming selling opportunities in this market. I hope I made myself clear. Abby 2652. If you are still in the house, let me know in the comment section. And Jack Racentis, good morning to you. Glad to have you around. Well done. All right. So in the absence of no questions, I just want to assume that we understand what we talked about here, and everything has been very simple, as so far so good for this week. So let's continue to monitor price action and ensure that our positions mature before we jump into any positions in this in the market we review today. So for today, we have treated the US Oil, the USTech100, the GBPUSD, USDJPY, and of course the XAUUSD. So these are the pairs and instruments that we are going to be monitoring for this week. So I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well this instrument have been doing so far, and at the same time manage the existing positions we have in anticipation of the New York session tomorrow. And for those who are joining us for the first time, I hope you are able to gain one or two things from what we discussed here today. It might look a little bit overwhelming at first since this is your first time with us, but trust me, the more time you spend with us, the better you get to understand how it works and be able to digest the information here to use it independently on your own account. So glad to have you around, and I look forward to seeing you tomorrow too. And on this note, I draw the curtain and wish you best of luck today, and do have a wonderful evening, everyone. Bye-bye.